Hey guys, so for today I'll be covering the OI Profile Remastered update. I'm going to talk to you about how to use the new information provided in this update to be clever and play against the dumb positions. It's going to be a very short video hopefully, because I made a thread on this in the Lifetimes chat, and I'll share that in the members lounge as well if you want to have a big breakdown of everything. But this video should help you understand what to look for and how to get an entry, which I know a lot of people have been asking about. So when you load the indicator, it will show up like this. I've disabled liquidations by default because I think it's a lot for someone new to have all that information. I want you guys to watch the video series and learn the basics from the videos and then gradually build up to make your system. So you'll see here that I'm on the 5-minute time frame on a daily session. I think that's the optimal settings for this update. And if I want to look at the new tools, you can have this all enabled at once, but for the sake of ease of use, I'm going to enable them separately. You can enable the positionings for the longs and shorts, which will make it so you could track who's being clever and who's being stupid and where the market is trading at on that time frame for that session. And then the liquidation focus can then be applied to these longs and shorts. So if I enable liquidations and I disable shorts, for example, you will see liquidations just for the longs. And if I enable shorts, you can see it for the shorts as well, which is pretty helpful. But let's disable liquidations for the time being. Let's cover longs and shorts and how to use it relative to the DPOC. So if you remember in the previous video, we talked about the DPOC and that being the representative of the average positioning of the market. If I'm someone who's trying to short the market, I would like to short the top. So that means I would like to short above the DPOC because this is the average position. That's a good entry. However, if I'm someone who's looking to, I know this sounds very straightforward, but some people may have, one, not watched the video for the last part, and two, it's just going to be helpful to visualize this now before we get into it later. If I'm shorting below the average entry, I am being aggressive, so price will likely run away from me and try to squeeze me out of my position to liquidate me, right? So then, if I see it like that, the same can be said for the long side of the market. If I'm looking to long, I would like to long the bottom. So you know what, let's make this green. Let's make this green. I like to long the bottom because that's a good position. Long the bottom, you're not likely to get squeezed, but then if I'm longing the top of the market, the price is likely going to move away from me to squeeze me out of my position. So now that we've covered the basics, I'm trying to go through this kind of quickly, by the way, just because it's quite self-explanatory, and we explained the DPOC in the previous video, and I'm going to give you examples here. Now that we've explained this, we can leave that there for now. Actually, ta-da. Now that I've explained the basics of, okay, longing, I want to be below the DPOC because that's the average position. Shorting, I want to be above the DPOC because that's the average position. Those are making it so I can long the bottom and short the top. I don't want to be squeezed. That's what's in your mind. There's two things you've got to look out for. The change in the DPOC over time and the change in price action. This is the most important part. So, I'm looking at this position in the market. At this point in time, the market is quite indecisive. You can see the DPOC's within a tight range, and when it's moving, it's barely moving. And the longs and shorts are actually quite positioning at the average, and they're all fighting amongst each other to see, because you know, consolidation, people are just taking positions non-stop, back and forth. Now, I wouldn't recommend doing that necessarily. I wouldn't try enter here when things are bouncing around like this. However, let's say you did. Let's say you took a short at this average. It's not necessarily a bad position at the start. Why is that? Well, price had been pumping recently, right? So maybe you're thinking, you know what, this is the end of the pump. So you took a short and then you realize, okay, I'm shorting at the average. But that's not suboptimal. It's not bad yet. Until moment of price action starts to run away from your position. Why is that? Well, as price action starts to run away from your position, the DPOC is now below the current price action, but so is your position. So you are now offside on this market and shorting against the price action. So you're likely to be squeezed. Very straightforward, very simple to understand. But I'm telling you this so you know, okay, probably best not to take a trade here. But if you do, it's not the worst until the moment price shows you that you're in the wrong. If you know that you're in the wrong, close the trade. And then, so let's cover more of the nuances in this scenario, right? So if you remember, I told you the DPOC, you don't really want to long above the DPOC, but these guys did. So you're thinking, oh, Spaceman, you're wrong. Well, wait a second. If you think about it, they longed here. They were being aggressive. If price really went against them at all, they would have likely been squeezed to death. However, they got fortunate, or maybe just the price action was indicating for momentum. at this point in time, price went along with it, right? Price went up, and so they were in profit pretty much straight away. If you're in profit pretty much straight away, that's usually a good sign. Your trade's going well, you're scalping on a low time frame, you're aiming to get good entries that where price reacts to your entry quite quickly. They're fine for now. And this is what I'm talking about. They're fine for now. So the dumb position was here because price ran away from them. It's not necessarily awful, but if you haven't closed your position, you're probably going to get liquidated. Now the DPOC has moved. DPOC has gone up. So now this long is below the average. So anyone who's here at this point in time is actually now in a good position. But I wouldn't say to try enter here now. If you're clever, what you're going to do is keep in mind, cool, these positions running, it's running up, it's pretty much no resistance. You know how it is if things are leaving prints like this where there's not much like efficiency in the market, it's inefficiency, single print, so on and so forth. You'll see them as fair value gaps, so on and so forth. That will likely have a chance for price to run back through them, right? You know that from theory of market profiles and so on and so forth. So let's keep that in mind. By that logic, price could return back away from them. That's an option to let you know, okay, price might revert a little bit. Cool, keep that in mind. The second thing is that we've already been on quite a significant run up, right? So cool, they might be overextended. Another reason for potential for shorts. Now let's look at the daily time frame real quick. That was actually, you know what, quickly, let me just ingrain it in most people's viewpoint, that this was roughly around 30k. If you know, so I wanted to point that out. If you know that on the daily time frame, if we come up here on the high time frame, that this 30k region is actually resistance. This point here is actually acting as resistance. So on the high time frame, we're looking for a short opportunity on the high time frame. So I've given you 3 reasons to look for a short. I've given you 3 reasons to look for a short. So let's go on the low time frame and keep that in mind. We've got a high time frame potential for short. We've got potential single prints that are occurring, which likely lead to price running back through them again because they're likely to be filled. And we've got the idea that price has been extended for a while. So you know what, on the low time frame, I'm looking for a short. High time frame, I'm being confident that shorts are probably what I'm looking for because we're running into high time frame resistance. Let's look at this profile. The average position is here. And I told you, if you're shorting the market, you would like to position cleverly above this average position. You can see that short then averagely positioned here. So the price action changed where shorts are being entered. And now this can be your idea for, okay, this is a great short entry because I have all of these confluence of price action, of single prints, of this extension, of this high time frame resistance. And now according to the profile, logically speaking, this average position is significantly lower than my short entry. That means I'm potentially shorting the top. So these people are being clever. I should look to short with them. So you can now use this as an opportunity to short. And one thing you'll find is if a good position is being defended, like your entry is acting as resistance for your short, that's typically a good entry. And you've got the high time frame confluence as a great confluence to go along with your short. You hold your short and you've made profit. Now this isn't always the case. It's not always going to be this clear cut, but I think this is a great example. So I hope you guys have enjoyed this part of the video. But we're going to cover some other examples in the market. One thing you can see here is, and I'm not going to try shy away from this, these guys were shorting above the DPOC. So you might be thinking, oh, this is a pretty good entry. Well, at this point in time, just for the daily time frame, you can see how these guys who are longing the tops, by the way, they're pretty much just getting like fucked around, like it's just passing around them. But price moves away from them. So at this point in time, this short is no longer the most clever entry point for that daily session. Now overall for the high time frame, it did work out if you did short there. But if we're just looking at the daily session and you're trading the daily on an intraday, you don't necessarily want to short when price is just revisiting your entry and it's acting as support. Once again, do you remember what I said? If you're taking a short and price is using your entry as resistance, it's working out pretty well for you, right? You see it when you take trades. But then if you do the opposite and price is using your short entry as support pretty much, then that's obviously not the best entry. And that's just the nature of the market. You can't always use these values like just like that. You've got to put all the complements in mind: the single prints, the overextension, the continuous run up, the high time frame resistance. So that gives you complements. Now this likely led to a significant OI wipe, so that's why we had this bit of a consolidation in the market. But yeah, here's some other examples of the market doing what is considered good versus bad, right? You have this idea that the DPOC, these guys are long and below the DPOC. They're in a good position for the market overall. It's not like extremely below, but it's better than nothing. And as you can see, price was already starting this uptrend and continued. And as soon as price moves away from your entry, you could consider that relatively decent. Now, if you do aim to short at the highs, once again, you would like to short above the DPOC. But in this case, you can see how these guys, they shorted below the DPOC, but price went away from them significantly. So it gives them that opportunity to look for an understanding that, okay, I'm in a good position because price ran away from me. It's not necessarily always bad. That's something you just got to accept. It does help to visualize these things as DPOC being an idea for roughly what I'm looking for, but price being the main narrative of what I should be paying attention to. And here's another good example. These longs aren't necessarily badly positioned here because they're at the average, but if price has started to change structure and is starting to go down significantly in a downtrend, their longs are now being used as resistance, which is a bad thing. Your shorts are now being used as resistance, which is a good thing, and you can use that as an opportunity to see, okay, these longs are offside. Price is running against them, and here's where they're positioned. If they're positioned up here, and price is already down here, then they're just getting squeezed. And if anyone else tries to, like, let's say for example longs move to this point, you would know they would get squeezed as well. For this point in time, this profile here shows that the daily profile is in fact indecisive. Longs and shorts are all positioning at this point, and you can see price action is also indecisive at this consolidation period. So what should I look for if I want to look for a short? For example, let's say I'm expecting continuation of momentum. If I'm looking for a short, ideally what I'd like to see is potentially a unmatched run up that just kind of goes like this, and maybe shorts pile in here at a resistance point that is coincides with the previous lower time frame resistance. If shorts run up here, I'm going to look at this and see, okay, good entry if the DPOC is especially here. But even if it's not, and the DPOC is quite close, as long as it's around this point and shorts are now piling here, this is a reasonable point of entry because you're at resistance. You've seen a significant run up, so it's potentially overextended. You can see that as potentially clever. And as soon as price moves away from it, that's a good entry. And what would I look for if I'm looking for longs? Well, if I'm looking for longs, keep in mind that the DPOC is the average. If the DPOC is moving up here and my longs are down here, or for example you caught here, then you've potentially got a good entry to let that run for a little bit, take profit at resistance, and maybe leave a runner. That's how you use it. You use it in mind with price action first and then DPOC second. It'll tell you who's being clever and who's being stupid. But it's not necessarily the holy grail of this is always going to work, because you can't always see it like that. Sometimes following the momentum of the trend makes sense. For example, in these cases here that you can see here, where the shorts are slightly below the DPOC, but it worked out for them because the general structure of the high time frame market had changed significantly, and we started to run down because we made a lower high on the high time frame. So this should give you an idea of, okay, we'll potentially continue to move downwards. So when I'm looking at this on the low time frame, I need to take into account that even though price is moving downwards and these guys are technically short and below the average, the overall high time frame trend is downwards. So as soon as price starts to accept below this, I'm going to acknowledge that's potentially a good entry. And I wouldn't have actually taken a trade here because I might have not been so confident that maybe this was just going to be a sweep of the low. But as soon as the lows have been swept and we closed below that and we retested, that's an okay entry. But you can play it as you wish. I'm just telling you guys what to look for in terms of who's being clever, who's being stupid, using price action as your predominant decision-making tool relative to the position of everyone else. So as soon as these shorts prove that they were in a good position and they're likely being clever, this little retest of these lows was a good entry point for you. So at the end of the day, use your price action knowledge, but then use this tool to give you an idea of, on my time frame that I'm trading, the 5 minute, for this daily intraday session, that this was a good entry, this was a good entry, and this was a great entry. And these were especially because they formed lower highs and so on and so forth on the high time frame. Anyway, I hope you guys enjoyed. I hope this video was quick and well explained. If you guys need more, I'm going to post a thread in the lounge chat that was set to the lifetimers, which will give you a little bit more nuance into what's going on. And I'll speak to you guys next time. Bye.